Morning traders, welcome to the TraderLab. I'm your host Tom B. Thanks for visiting today. This stream's about integrating Bookmap Order Flow tools with auction market theory using the volume profile as a chassis for structured trades in the intraday developing time frame. This is about the business of trading. The business of trading is probably different than you imagine it to be. And if you're interested in the business and potentially learning how to trade and create consistency, deal with your mental issues, the challenges we all face as traders as we develop. Many of us get stuck and we keep doing the same process over and over, looking to fix it. But the possibility and probability is that your process is defective and you do not have a statistical edge. You will always have winning trades. We are in a random environment. So gamblers have winning hands. They fork their dollars over to the house that only takes games or plays games that have a statistical edge. It's a matter of just playing the game. So if we extrapolate that concept, our trades are like games. And they're not a game, of course, this is a business. But we have to approach it like a business, and we have to release ourselves and learn to manage our emotional states, which will ultimately be the biggest obstacle because of your fear, your uncertainty. All these elements are continually working against our primal wiring. So that causes us not to be able to do the job. So if you're interested in the job and potentially creating a career path and sustainability in this business, you might want to take advantage of the TraderLab. It's a community of like-minded traders who come together to leverage their collective experience. This stream and this group of traders, the TraderLab, is about you. All I am is a guide. I've got 47 years of doing this, and everything you've done and everything you've even thought of, I've unfortunately already done. And I found for myself, I kept working hard and waking up at the same place. I coined a phrase for myself. It was called Trader Groundhog Day. Work hard, get excited, think I got it, wake up, same outcome. Why? Random winners, no edge, and the idea of the winners kept me on the path of making it better. You can't make a defective process better. I hope this makes sense. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. By the way, grab a pen and paper. You're going to see some interesting structured trades today. This is what I have shared in the TraderLab for developing traders to build out their plans. Also, there's statistical probabilities in this and an understanding of market mechanics. And my objective, remember, with this stream is to help traders create consistency, learn to read a language of the market. Ultimately, the market is a language of participant behavior. It is not predictive. You cannot predict anything. Now, you don't have to take my word for it, but I'm going to say, this is not a business of prediction. It's the business of maybe and getting an alignment. And then whatever happens, happens. That's the reality of it. Not what you want to happen, not what you hope for, but what the participants do in their interaction to try to figure out what's too high, what's too low, what's fair. And the other piece, just to keep you on your toes, is internally, intraday, the rotations are random. So you will get taken out of your trades. You will get stopped out. You will miss the big move. All of that's part of the business. You cannot solve for randomness. You can solve for existing and prospering in a random environment. Hope that makes sense. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but as you have seen, if you've been following these streams, if we get into real time, I talk about it. Now, the other part is, if you followed yesterday's stream, it is almost the same as today in many areas. Nothing is always the same, but you're going to see similar structured trades in yesterday's stream as well as today. Why is that? Because I share a process. And if you can replicate not the time frame I trade, but the understanding of the behavior, codify it as conditions. And when the conditions change, different trades become qualified. When you can define that, you will already know that potentially the behavior is changing and that the trades that were previously qualified are no longer qualified, and then you would turn the barge around and trade from a different direction. I always suggest to developing traders that you only trade with the dominant side. So no counter trend trades. Why? Slow yourself down. Try to recognize the dominant side and use reversals for trade management. That's the first piece. So you can learn to potentially become profitable, develop discipline, and develop a market understanding. And with that in mind, without further ado, shall we continue? Now I'm going to show you the higher time frame. Now this, yesterday, in fact, on these days, I was looking, and was even today, looking for us to take out the stops over here, here, and then the all-time high, somewhere, is up here. So that has been my plan. But this is the obstacle. This 7007, let me see if I can, hold on a second, guys. Nothing is easy. Okay, let's look at where these levels are. This is the stops I've been trying to trade into. This is this micro composite high volume node. The 700275 is like an over-under. And the other part of this is, now this is the auction. The language of the market, and I'm not going to spend much time, you can get this from many other streams. This is the outside edge, too high. I'm not paying that. Remember, shopping. And this is the outside edge on the other side. Oh, it's on sale. This is the retail price, or the high volume. This, trading is like shopping. What I know up here is, if this is too high, and coming back to it is something called reversion, mean reversion. So in different time frames, we're operating inside of different, you guys think of it as time frames. But the thing about it is, if this is too high, I can reject it. Now, there's no perfection, and these are not brick walls. They're levels of volume. You have to think of this as a lot of slop. There is no precision. Don't you wish? Me too. Is there? No. If I come outside, this is yesterday, and I run out of buyers and I get below here, then there's trouble. And if I get below here, it's either an exit or a short. And then yesterday was a very interesting day. We took out the buy stops above here, and we took out the sell stops under here. Kind of a surprise, but then again, this is trading. And we had what was called an outside day. Now, we also had something else. We had something that is defined by market profile. And by the way, it's called a normal day. Now, there's over a 90% probability that we take out either the first hour's high or low. Okay, a normal day is when we don't take out either, and it's about a 4%-ish probability. Now, I don't know what normal is about that, but that's what it's called. Just telling you. Don't blame me. So we have this normal day. So yesterday, remember, longs in the morning, and then it was shorts all day. And you can see that in yesterday's stream. Now, today, here's the levels. If we're under here, that's too high. The fair price in here is 60, 63 area. So if we come here, we can come here. And this is too low, the 35. Yesterday, my target on the shorts was 23 and change. Okay, so I was trying to go here, get the stops under here, and then possibly come back. We only got to this level. Who knew? So this sets up the levels. All-time high, trying to go there, forget it. Yesterday's high, sayonara. This is the key price up here, too high, and then anything that happens. Now, there's more. We have the ETH high. Let me give you some statistics, and I have to go over the context, but I want to go quick here. So I'm going to try. It's hard, but I'm going to try. We opened higher inside of yesterday's range and outside of value. This is a critical and a very key important element. If we open in range but not in value, the market's out of balance. So what we can consider, here's the possibilities. An overlapping or something called a normal variation day. So if we break out of the range, that changes everything. Then it's longs only. So let's take a look. RTH open, out of value. My first trades are going to be longs going for this. ETH high, let's go to our statistics, opening higher in range. ETH high or low, go pick one, has a 97% probability. Write that down. Past performance, not indicative of future results. You got to figure this out for yourself and you got to vet this. Taking out the first hour's high or low, 98% probability. Taking out the previous high or low, 82% probability. Getting to the overnight volume point of control, I'll show you these as we run along here, 81% probability. Taking out the ETH high, 76% probability. Checking the previous value area high, and I've got more naturally, 72%, wherever it went, value area high there, 72% probability. Overnight mid, I lost it, 75% probability. The previous point of control, which I believe is there, 68% probability. So this kind of gives you the lay of the land, all right? Is everybody with me so far? So we are starting out with statistics. We're starting out opening out of value in range. So it favors the upside. And I do know, where's my resistance? It's at 02. 02. Now we are ready to trade. And now we have no idea. How do you like that? The idea is the following. Based on the context grid sheet, it's longs to start. So I'm going to show you the opening trade. Now I want to remind everybody, yesterday's stream, you should all watch it this coming weekend and watch this one. Here's why. They're the same. What does that mean it's the same? Every day is unique. Every rotation is unique. What is the same? The structured trades. So go back and reverse engineer. Now, overnight volume point of control. Fair price, 82% probability. Value area high. Opening out of balance. What's my first trades? Longs. Where? Good luck with that. Do you think I know? No clue. I am clueless. But I'm not ignorant. Now I'm going to deploy what's called structured trades. I have a high probability to go there, and I have a high probability to take out yesterday's high or low, and I have resistance here, right? Everybody with me? Let's watch now first trades. Now guys, these are not trade recommendations. I am clueless, but I'm not ignorant. I take stops. You take stops. It's called overhead and cost of production. When you are fearful, you're not a trader. You want to be a trader? You must master fear because it's with us all the time. You need to anticipate the fear and understand where it's coming from. It is attempting to protect you from the saber-toothed tiger, from what we don't know. In uncertainty, aren't you apprehensive? Aren't you? Well, if you are, then you have fear. If you know you're going to have fear, wouldn't you be prepared for fear? So, this is called a variable high volume node. Now, this is how I figured this out many years ago, how to read microstructure. And this is the most aggressive trade. And the reason it's very aggressive is there's no information other than yesterday and the ETH. So when you're starting out, this is from yesterday's RTH, the value area high. This is the ETH, the fair price. And this is the current developing auction, RTH auction. So this is the most current price. And because the volume starts at 0, it's the most sensitive thing. So I'm looking for longs. Brilliant. How do I get long? That's a great question. Let's look. Let's watch. This is very subtle and very advanced, but I want you to go back and watch yesterday's stream so you can see structured trades. What is a structured trade? It's a trade I already know I'm going to take if the parameters are aligned, and I'm also going to take a stop if the trade doesn't work. That's certain. Everything else, random. Write that down. Everything is random. So into this being right, needing to know, wrong business. You have to change what you believe and what you need. You don't need to be right because you can't. There is no right as far as the outcome. The right is about you following your plan. That's the only thing you got. You don't have any control over this. You only have control over your plan and what you do in relation to it. Let's look at what we know. This is too low. This is too high. This is resistance. This is support. Microstructure. Here's how this would work. I'm not paying that. Yeah, but it's on sale. Notice the absorption. Pick, break high, see the delta. That's an aggressor. Take a look down here. You notice something a little different. I got a buyer here. Less buying. So what's going on? Sellers are right there. There's your counter rotation. Right here, I have a buyer. Now, I have no idea. When I see this, going to 0. In fact, I'm looking at this for my long. And instead, my buyers show up. Now I've got to wait for a retracement or some other structure. So here's what I know. Too low. I got to mark this one too. You'll see why. And again, this is an advanced process, guys. This is not where you start trading. This is where you learn to read. This is like speed reading. You're going to see this process in all time frames as you think of them. I don't think of time. I don't use time. I use behavior. So I'm not waiting for 5 minutes and I don't have the stopwatch out. I have the behavior. So this tells me if this is the retail price and I leave it, it might mean, and I'm always going to say maybe because that's all I got, that this is too low. If I get through this was resistance. It's now too low. This was resistance. It's now too low. I can buy any of these and my stop needs to go below here. Not there. Here. Up to you. Resistance. Reaction. Let's watch. Watch. Where's my support? It's there, there, there. And it's always possible to get taken out on an inventory grab. And I'll let you know my plan. I'm not saying it's a good one. I'm just going to give it to you. If I get taken out on a pick and I get another buy, I put it right back on again because all it was is, let's remember how the market works. There's sell stops here and there's sell stops under these swings. Because this is what retail traders do. And I'm not saying it's a bad idea. I'm just saying it's an idea. Here's another piece. This is resistance. If I break above it, notice how it acts as support. So I can use this. If I choose for trade management, you have to vet this. And if this was, so this is resistance. Break high, support. What do you notice here? Break low. What is this now? Resistance. I can be out of the trade here. I take the risk that it just pulls back to VWAP or mid and it takes off. This is where your plan comes in. Not saying what will it do here. Is it going to hold this and I make a new leg up because I'm going to get the buyers? Or do I come back here? I don't know the answer. If you do, DM me, we'll talk. Now, where's my support? It's here, 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 and out the bottom, say la guerre, we'll see you later, or say la vie. Watch. Support. This is a long. Now let's assume you're sitting here at the switch and your teeth are chattering. And I'll tell you what goes on in my head. I just want you to understand. Mentally, I'm attached to Hyde. Hyde's the lunatic under the hood, the one that looks at things in hindsight and judges you and actually depreciates you. Has Hyde ever tell you you're brilliant? No. Hyde says you should have got out here, and now you have regret, because not only is Hyde chastising you, you've given back MFE, and you have that bad emotional response. Is this you? By the way, it's me. Why is it me? I'm wired that way. That's it. I'm wired. And this is what you need to understand. When the emotions come up, which they will, you already need to know they don't have anything to do with this business. Hyde, the lunatic, cannot differentiate between the present, but only in the past. Judgmental. You shoulda. Oh, I should have sold this. I could have got that. You know, all that nonsense. Doesn't exist in the trading business. It just exists in the Hyde business, the lunatic. So let's say here, now this is an area for a long. Now let's assume you go, the stop's under here. I don't want to take a long here. Is that possible? What do? Right here, going to zero. Look at this. I held the VWAP in the mid going to zero. And what I go through mentally is, oh, never mind what else I say, but let's say crumb. This trade's going to get stopped out. And I have all this mental noise going on. But I also, on the other side of my brain, the non-Hyde side, where my trading brain is residing, it's process, not emotion. So I know this is support, and I anticipate getting stopped out. That's Hyde. And coming here for a continuation long. Okay? That's my next trade. And or under here into liquidity and a long. So my longs are in this area. Let's watch. Going to zero, annoyed, already have regret. What happens here? VPOC migration. What's the language? Too low. I'm going to mark it, by the way. That's my support. Now, again, if I am not taking it because of the opening swing low, which, by the way, I'm going to mark. I got to do that too. Because what's under the opening swing low? Anybody? What do you think? Anybody? Take a wild guess. What's under the opening swing low? And what do we call that in the TraderLab? Someone's asking, was there news? Russ, what are you referring to there? And if you're in, hold on a second here. YouTube, thanks for visiting. Hope you guys are getting something from this today. Yeah, great. Okay. Okay, fuel. So this is what I know. I've got now, what do I have? Sell stops are here, and I got more sell stops under here. Who's on the hook? These guys. Now, if I find my buyers, the buyers are still in control. So they're in control here. I get VPOC migration. I can take a long here, and I have to scale ahead of where the sellers took control, which is up here. I'm going to draw a little high volume thing. So the outside edge, now I'm going to explain a little more. I'm going to get into a little more multiple time frame for you. And this will make you nutty. But let me explain what I'm actually doing. I'm using multiple time frames with the exact same behavior. Nothing is different except time frame. This is these rotations. So what happened up here? An auction. I'm not paying that. The buyers are there. The high volume is up here. If I break down because I found too high, I'm not paying that. Think of it like a mini mart. I can come back and return to the next higher time frame, which is the developing daily time frame, and the support is there. And when this shifts up, so this is my support, or this, I can't remember which one it is, might be this one and this one, and it shifts, I can buy it. And then I got a scale here, and my risk is still out here. There's my support, there's my support, and I'm going to try to go here. There's my scale, and what's my statistic? You wrote this down. You see why I go over all this stuff? Why would I go over all this stuff? Because I have over a 90%, 98% probability to go here. So if I'm taking any of these longs, my stop is under here, my scale is here, 98% probability, and then going to the moon or wherever the heck you go. Does that make sense? That's the long. This is a structured trade. You can learn that. Who knows? Watch. Watch where we come back. Where's my support? See it? Now, if I don't get the overnight high, I can keep taking longs because I'm trusting, using the term trust. I'm out of balance, so I'm outside of yesterday's value area. I'm above the overnight volume point of control, the last retail price, and if it's too low, and I'm finding my support, I have this high probability statistic and I have liquidity here. I'm going north, and that's all I can tell you. Is everybody with me? That's the long. Same as yesterday. Exactly the same. Evan, I don't know what you got there, but audio doesn't work, so why don't you delete that and post something. Thanks, Evan. Okay, so resistance. Let's mark it. Variable high volume node. So I'm marking it from both sides. Why? Because it's an auction. And as the volume moves, it's the shoppers. That's what I know. I don't know anything else. Remember, this is resistance. This is my statistic. So as long as I'm going, and I can fall out the bottom, all right? So let's watch. And I'm going to show you the short. Now, this is the target. This is an obstacle. And so for me, this is where the trade goes. And then if I have a runner, I'm going for more. Why not? Don't forget where my resistance is. It's up here. So I'm under here, but I can still come back or take it. I can do anything, right? This is trading. So I don't know. Notice the liquidity and see how it's resting in the book. When you're using Bookmap, you already know there are sellers here. So if you know there's a seller and you have a high probability statistic, then you have your choices. This is your trade management. Now I'm going to show you the shorts. It is the same exact trade as yesterday. This is why there's no mystery in how to trade. The mystery is in the randomness of the market. You see? Stay away from everything else. You don't make it up. You're not playing a video game. If you are playing a video game, it's just entertainment. It's no different than playing a video game at home. Now, this is the outside edge. Okay, this is the opening swing low. What do we know? Let's come back to what we know. We got longs in here, and the sell stops are under here. We also, because we have longs, we know there's sellers under here. Now, we don't know at this point what might happen. But here's what I know, not what will happen. If I break under the opening swing low, which is where my buyers were, and I break below, I now have a short. if I pull back, and then if I get back in here, there's over 80% probability, past performance not indicative of future results, you got to vet that we go there. And then I have the possibility, since I have a statistic, if you remember yesterday's high or low, which we didn't get to, has what? Because you wrote this down, I know you write them down, 82% probability to take out previous high or low. You might want to take a wild guess here that it's not going to be this, because I didn't clear that, which is my resistance, and this, of course. So now this is a short, and I want to show it to you because it's the same trade as yesterday. Those of you who follow the stream and watch these things, you should be doing screenshots, annotations, and vet these. So I break low, I have a sweep. Now at the sweep, I anticipate a counter rotation. It's right here. Now, where's my resistance? There, there, there. Okay, all that's resistance. So I get this, I break high, this is support. Look where it is. Buyers are here, there they are. That's absorption. You see the sellers? Why isn't it going down? There's a buyer there. There's the buyer. There's your iceberg. All right, that's nice. Now what? Break high. This is support. Microstructure. Resistance. Break low. Trigger. And here's where the entry is. Let me draw this for you. I'm going to show you again microstructure. What I am doing is the same exact thing in multiple time frames as you think of them. Let me show you the microstructure. So what I'm doing is I look at the whole thing, I look at the intermediate deal, and the behavior is the same. So right here, I get a buy trigger, but I'm here. And I also know this. Why am I back here? You see, shouldn't I be continuing and not giving the shorts a chance? Well, now it's the longs that are in trouble. So the high probability of not getting yesterday's high or low, and I have one and it's failed at the top, I'm going for the low. You see? So now I get this resistance, break low. Here's the microstructure. I'm not paying that. Yeah, but it's on sale. High volume. This is retail. If I can break below this, this is now my resistance. Remember, it was support. Resistance is here, outside edge. Retail is here. Break low. This is an aggressive short right there, or this is your short right here. Your stop goes here or up there. And now you're on the financial you-know-what. Where's my resistance? Let's come back. I just want you to see how this works. No clue. Ignorant. But not clueless. So what do I know? High volume is here. That's resistance. I can take a short. I would be, and this is another target down here. Not important. Microstructure right here. Retracement. Where to? Here. Where's my resistance? Where is it? It's here. High volume. I'm not paying that. Yeah, but it's on sale. Retail. Get out of here. Leave the store. Come back and check. Is it really too high? Yeah, forget it. This is another short break. So short. Stops have to be out here, guys. None of this micromanage stuff. When you make a decision to put your stop here, you are acting in response to hide, because it's not, what does this have to do with good trade management that has an edge? Or is it, I don't want to give it back? Who makes that decision? The business of trading or your fear? You see what I'm saying? Who is making the choices? I found when I was building trading systems, and this is, I don't know, 86, 80, I don't remember. somewhere out in there. And my goal when I conceptually was putting together the system was to squeeze the risk out. So I wanted to get as much, because I'm risk adverse. I didn't understand I was also choking off the opportunity, and I didn't even have a statistical edge. I was using optimization processes. So I was optimizing, which is curve fitting, of course, and it doesn't work. But I was a trend follower, so it was much slower, So because I was in for larger swings, I could still be profitable, but the system, if you will, was always behind because it couldn't detect change until way after the fact, because it was trend following. So it'd take a lot of days. So in here, though, I can see it in all different time frames. So if I know this is too high, I want to be out here. And I'm not going to put my stop here, and I'm not going to put my stop there, because this is the fair price. I need to be out here, the last place that was too high. And then either we're going to come back and check it and I get taken out, or we just do whatever. This is the next target, 67% probability. Look at the liquidity, interaction, and a sweep. This says counter rotation in the language of the market. Where's my resistance? Isn't it here? And isn't it? I tell you, this is like music to me or language. And I always say in TraderLab that this is the language of the market. I don't use any indicators. What is my, quote, indicator? It's participant behavior. I don't want anything else here, because if I'm overlaying some kind of derivative, MACD or oscillator, RSI, any of this, what does that have to do with this? This is the price. So if I'm trading a pricing mechanism, which is what the auction is, I know that this is where my sellers are. And I've rejected it. And I'm rejecting it. So I know this is my resistance, and I want to have my stop out here. And if I get picked off, I get picked off. What are you going to do? What do you see? Not saying it's right. I'm saying this is market mechanics. Where's my next target? 67% probability with a sweep, which sets this up. Now let's go a little further. By the way, do you have questions? How are we doing in YouTube? Are we alive? Is everybody conscious? Everybody's unconscious. Let me know where you are. We'll send the ambulance. Desroach, what platform are you running? And what data provider? It's Desrock, right? Maybe you can post that, let me know. We are alive. Can you prove it? You guys have questions in YouTube? Thanks so much for visiting. I want to remind you guys, watch yesterday's stream. Same trades. This is the whole point of TraderLab and why I created it. I believe I can teach anybody how to trade. Period. Now, that doesn't mean everybody can learn how to trade. It means I can teach you how to trade. And I can put it in a logical process that you can reverse engineer. No hocus pocus, no, hindsight, no nothing. It's just process. It's a detachment from outcomes. That's our hard part. Our psychology, you will find you can learn to trade if you do the work, but this randomness is what's going to drive you batty. Because when you get this, and now your brain sees 10 points, and then you get taken out, what are you going to think about? Not the success of the trade and following your plan. You're going to be focused on the 10 points. That's not where your mind needs to. You need to learn what is material in the business, not what is emotional. Is this making some sense? You'll notice in these streams, and I've been doing them, I guess, almost, I don't know, 4 or 5 years now, the market's random, but I'm not. I'm not random because the only way I can stay in the business is having anchored inputs. That means exactly the same. The process for me is exactly the same. I don't do anything different. The market is different every moment. So what do I need to be different? Think of it this way. In the casinos, they play the games exactly the same way, but they don't control anything other than they deal. When they deal, the cards are random. True? And the gamblers play the cards randomly, and whatever happens, happens. Where does the control start and stop? It's with the game and playing the game. And then the control is given away to the randomness. You see? Same business here. These are things you got a bullet point. And you, for mental preparation, when I'm going to trade, I mentally prepare myself. Now, 47 years of doing this, it's not something I forget to do. But for someone who's developing, who's all focused on the charts and this, and your brain is all over the place, you have to bring yourself down and center yourself to a process. So once I've done my analysis and I know where to put my levels out and go, well, it could do this, it could do that, who knows? That's me. I don't know. Do you know? I entered the market with a I don't know because it allows me not to be myopic or hide defend the need to be right. The lunatic, hide. So for me, I entered the market with, this will be interesting. I don't know. Where's my first trade? Well, it's going to be this. It's going to be a long. That was today. Will I get stopped out? I don't know. That's as deep as it is. What are you going to do if you do get stopped out? I'm going to take another long unless the structure breaks. I might just get picked off. I'm willing to take 2 longs, 1 stop, second shot. If it doesn't work or I don't get risk neutral, which is my first job, so the worst that happens is I scratch the trade, then that's it. I guess, Dedsrock, you're not listening to the stream, so I can't answer your question, which is okay. So let's look here. So these are all shorts. This is the next target. And the 63 is important and the 45 is more important. If I can get under these, now, next trade structure. Don't forget, short, longs, right? Now it's only shorts. Resistance. VPOC migration. I have VWAP, mid, full session VWAP. This is too high. I'm not paying that. Going down in time frame, I'm not paying that. You got to be kidding. Next higher time frame, developing, VPOC migration. You're nuts. Multiple time frames. Watch. I'm not paying that. Same as that. Same as that. Same as that. Same. Can you learn this? What's this? High volume. Same. Where is it? Let me draw a little line for you here. I hope I'm not taking too long. I'm showing you a methodology here that you can learn. All you got to be thinking about, I mean, all this stuff will make you nutty. Ignore it. Look at the auction. Then as we see, now this is a long rotation right here. Doesn't mean it'll do it. That's resistance. That's a sweep. That already lets me know this is possible. When I see this, I'm already looking here because this was the auction of this distribution. So high volume is up here. I'm not paying that. Get out of here. All right. It's resistance. If this one shifts down, higher time frame, this can be resistance. And I can also rotate up here. So if I take a short here, my stop's going to be either up here or over here. If it doesn't fit my risk parameter, I don't have a trade. I just get back in the Barca Lounger. Let's go further. Now, at 9:30, we have another trade. It's called, and this is another structured trade. It's called the IB continuation trade. You would learn this if you're in TraderLab. So how do I work this? If this is a short, and at 9:30, remember the statistic, taking out the first hour is high or low, and I don't know about you, I'm leaning on the low. Do you think that's a good guess? 98% probability, take out the first hour's high or low. This is the first hour. I'm in Central Time Zone, 9:30. So what do I have? IB low, 98%. Why would I be taking shorts here and here? It's because I have a 98% probability. Why would I not do it? I have an 80% probability of going there. Why would I not be taking shorts with my structured trades? Question? Anybody? Why would I not be taking these trades? Is the American economy gone? I haven't noticed. Maybe. I know the dollar is gone. I'm just getting the question there in YouTube. So, short. Now, the IB continuation trade. Let me show you this trade. Now, I take this trade, and it doesn't matter what I do. I trade to statistics. Remember, 80% probability there, 98% probability there. Why am I not getting short? I'm just asking you. So for me, if I know this is too high, notice that the selling is here. Microstructure is right there. You see the continuity? Microstructure is here and here. See the continuity? I can use these in a time frame I select as trade management. I'm not saying you should. I'm saying you got to pick a time frame. You might keep your stop out here if you're going, wherever. Or you're going to manage it using these structures. And then here's the next piece. Just throwing you something to think about. What time frame are you trading? Because this is all time frame specific. Other traders have higher time frames. They're going to give more back. At the open, what do you is your time reset at RTH open? That's number one. Number two, what is your data provider? Because data is important. Okay, so too high, I'm not paying that. Too high, I'm not paying that. Come back to where the buyers were, which becomes resistance, you see? Now, here, I get over it. And my high volume is here. This is really the last straw because I got sellers here. So there's sellers here with the sweep. So resistance is right there. If I break high and I see the liquidity, now I can come down. Breathing again, holding breath. Take this out, trouble. You could be out of the trade. Now what? VPOC migration. It's just another short. And all we're doing is coming back here. And we don't take it. No clue. VPOC migration, break low, structured trade. And this is, you have to be careful of all this. So stop out here. Because this is another trade. Oh, who knew? That's another short. This is a short. Trying to show you the IB trade. I'm forgetting all about it. Okay, here's the IB continuation trade. So those are all shorts, guys. I mean, it is what it is. You can learn this in TraderLab. Now, these don't have to be your trades. These are trades you can learn. And then you're going to adjust this to your groove. Now, here's support. Here's the location. Watch. Right here. Now we have, it's called the IB continuation trade. Now don't forget, 80% probability to go here, and 45 is a big number. This is returning to the mean in a higher time frame. I'm in multiple time frames. Probably make you crazy. I understand, makes me crazy. Support, location, no reason not to think it's going to take it out. Doesn't have to, but let's get real. Break low, trigger. This is an order flow trigger, its resistance, and its location. And so you have a short here. This is your microstructure. Break low. You can enter here, stop needs to be out here initially. Once you start getting below this liquidity, you can start moving it down subject to your plan. Let's look at the behavior. Buyers are here, break low, resistance, lower. Sellers are now here. Sellers are now here. I'm below the liquidity trigger, break low, resistance is here, absorption is there, resistance is there. Okay? Retail price, break low, watch, order flow trigger, sweep. This suggests counter rotation. Choices for this astute group of traders. You can do the following. Value area low. If I'm outside of value, I want to have my stop out here. I'm not going to put it close unless that's in my plan. I'm going to keep it out here. Up to you. And if you put it here, you're going to get popped right here. But I never put my stop this over on this one. I always keep it one back because of the stop picks. That's what this is, stop pick. So the micromanagers, you know, and sometimes they're heroes, sometimes they're zeros. Let's just stay with this. Anyway, there's no longs. I think you can kind of figure that out. So this is the pick over here. If I pick and I get below it, I can then use this up here for resistance. Or this, you know, that's your call. It's not mine. But I'm mechanical because it's plan based. I am not predictive. I mean, wouldn't you like to have predicted today? Say la guerre. Now, the 22.5 is my target coming down. So this is where I was trying to go. Let me bring you back to the higher time frame. This is the outside edge, and the stops are under here for the longs. So this was where I was going to go, this outside. So it's kind of like, I'm not paying that. Reversion. This is reversion. And if I get below all of this, then I can, you know, I can come down to this one, which apparently it looks like we are. This is huge. So it was here, and if I get under there, I got this. That's all I know. And again, I can't predict anything, you know. It's not my job. But I can understand if I get below this and I have 15 as another target, which is coming from out here, another high volume node. If this becomes too high, I can keep rolling down to the next low volume area, which is around 68.70. Not a recommendation, you know, it's just, it is what it is. So what I'm doing is, I'm not going to tell you anything about what it's going to do. I have no clue. Isn't it better to know that your job is not to predict, but to align? Doesn't that take you off the hook about being right and knowing something? What is this? This is an order flow trigger. This is a trade in the TraderLab right here. And here's why. Low volume node, outside edge. I'm under the IB, wherever that went, and I can sell this. If I break below this, I'm going down to the next level. It's like an elevator. All right, where's the next level? Here. 69.02. Wherever it went, hold on. 69, wait a minute. 02 half. Where is this here? That one's not right. It should be 68.91. Should be down here. Some of these are old. They're stale because I didn't update them. I think I just moved the wrong one. It's 91 here. Anyway, 91 is the high volume. So this could be, all right, you're getting on my nerves now. Hold on. Let's do it the right way. So that 91 is this. If I get under here, I got this. Okay? So 68, 70-ish, and I can come lower. You know, there's no, who knows? 68, 70. Well, there you go. So that's the next target, okay? Nobody knows. So let's not worry about knowing anything because we don't know. I don't know. You know? Let me know. So this is TraderLab, guys. And how many trades have you seen? Not a ton. What kind of profits might you have if you were following this process? I'd say you having a good day. What do you think? Do you think this is complicated? Now it's random, so I get that, but it is not complicated. What is the, I didn't see your, let me see if you answered my question on rhythmic through Apex. All right. I can't tell you about Apex, you know. I really don't know. You know, I'm just using rhythmic, and I'm not trading through a, what do you call it, prop firms, they call them. They're not really prop. You do know that, right? But whatever they are, they're just, it's a casino. It's really wonderful. So this is the short. This is the next target is this, wherever it was. This. So that's my next target. And I don't know. You know, it could just keep going. Why not? Yeah, in Costa Rica, Alan, you know, when I'm in different locations, it's possible that you have lag. You know, another thing, by the way, Desrock, when the market opens, see if you have a delay, because in a high volume area, the time can get off. You know, I mean, I've sometimes seen mine up, you know, to 17 seconds, and that's just whatever. It could be the internet connection. You know, there's a lot of variables. Ping, you know, is it raining? Who knows? And if you're not getting the data, then all of this is going to be off. All right. Well, I'm Alan. You know, also being in Chicago, the CME data center is probably 10 miles from me or something. You know, so I'm just about, other than being co-located, I'm doing pretty good. So I get very good data here, unless Rhythmic is having a problem, which is also possible, you know, or one of their servers. There's, you know, variables in this. Anyway, this was the target. You could be done. You could get in the Barca lounger, take a nap, do whatever you want to do. So guys, where were the shorts? Would you have a good day today? This is a short. This one. This is the target. So I just trade the targets, and it doesn't mean we're done. I have no clue. But now, what is the condition of the market? Well, first of all, now let's go from the other side. You always have to think from both sides, okay? We know this is resistance. We're going to throw a little box over here. How you guys doing in YouTube? I hear snoring. I do. I can hear it here in Chicago. So this is resistance. Now, here's a possibility, not a trade recommendation. This is called balance. As this is balance, if you fall out of balance, then it's too high, we're out of here. And this is microstructures or short time frames inside. Think of time frame. Let's kind of reframe time frame. No clock. It's balance or auction. See, this is auction market theory. The auction and pricing is really, trading is a price discovery process, and it's trying to figure out always what's too high, what's too low, what's fair. And if we come to a price and then the participants go, I don't like that, I'm leaving, they get in a car and they go to the next auction. And if this is too high, they leave, and you'll notice these auctions are what you guys might think of as consolidations. Inside the consolidation is a high volume node and an outside edge where the volume dries up, and out here where the volume dries up. So it rotates. That's a consolidation. Inside of this thing is high volume, or the retail price. If the participants go, nah, I don't want to pay that, they leave, and then we take out the low volume and we start this again. So all this goes on, okay? Now I come here and you'll notice my resistance is here. It's a variable high volume node. Let me mark this thing. I just want to show you again what? Structure. This is called structured trading. So how do you trade this thing? Now we're in a context inside a context, multiple time frames. What am I talking about? Sometimes, this is resting liquidity. Why are they sitting in the book? They are sellers, and there's more liquidity up here. Here's what I can do. Now, here's what I know. Remember, I don't know what's going to happen, but I can know what has happened. What I know is I had a VPOC migration. I had a consolidation in a retail price in a microstructure here. And in the higher time frame, the developing daily time frame, I got the same thing. What is there? Micro is now here, higher time frame. If I break below, I've got a trigger in this structure, and I've got a trigger in the next higher time frame structure in alignment for a short. To where? To there or to here, up to you. Now let's come back the other direction. If I want to trade shorts, which for me is all I got on the menu for today, call me crazy, I'm not a counter trend trader. Well, let me reframe that. For developing traders, you should only take trades in alignment with the dominant side. Forget counter trend trading. You need to learn how to trade with the dominant side, do proof of concept, learn to manage your emotions, and become expert at several trades. The most common trade is this. And you got to watch yesterday's stream. By the way, as your educator, I'm giving you all homework for this weekend. Don't forget the market is closed here on Monday for President's Day. We're all going to party, put some flags out, have a good time. But in the meantime, what's going to happen between today and tomorrow? If we're closed, then you have 3 days to review these streams. I urgently suggest you watch yesterday and today. So you see the plan and then you see the behavior. This is mean reversion. This is outside in trading. And the way this works is if we assume the trend is down, and it is at the moment, and we can squeeze the shorts, which would be counter trend, no big deal, get used to it. This thing about get used to it, just funny sidebar. I was hiking in Lake Tahoe up at the top of some mountain somewhere, right up at the peak, and started coming down from the peak, very steep, and I rolled my ankle, which is a bad thing to do when you're miles away from civilization. Like couldn't walk, So, and I'm hiking with my wife, and I said, and I was like limping, and I said, I don't know if I can do this 3 mile thing, And my wife's comment was very supportive. She says, get used to it. And I said, well, given what? They're either going to come up here and carry me out or I'm walking down. I walk down. But so from now on, whenever I think of a situation that I'm uncomfortable with, I have to basically understand where my discomfort comes from, which in this business is the lunatic, fight and flight and all that, saber-tooth tiger, be sure. Well, there is no sure. So when you start in the morning and you do your mental checklist, you just dropped into an alien environment. You're not on good old Earth anymore. You're in the gaming business, total set of rules. So you can't solve, you see, for certainty and squeeze the risk out. You have to embrace uncertainty and the risk, which gives you the outsized opportunity. The risk isn't a terrible thing. The risk is what gives you the opportunity to have, like today, thousands and thousands of dollars in potential profit in exchange for the risk. How are you going to get the profit unless you're willing to take the risk? So when you want to avoid the risk, you're also avoiding the profit. I don't know. I don't think that's a good recipe in this business. So you have to learn about yourself and you have to have a mental preparation. What I do, and I don't do it like I used to do it. I think I'm kind of used to it. But what I had to do is remind myself and preempt. Do you know what preemption is? That's like you bringing it up before it happens. You know it's going to happen. You know what's going to happen in your brain. You know that these fight and flight and these hormones that are released in your brain, the chemicals, are on autopilot, part of the limbic system. You have no control over it. So it wouldn't be intelligent for this astute group of traders to anticipate that those chemicals are going to be released and that you're going to respond to the chemicals because you're under the influence of your limbic system, which is fight and flight and be sure and risk aversion and all that. And FOMO. FOMO is, it's going to get away. I always think of my dog. Take the dog out, he sees in New York where I grew up, you see a pigeon. They're like birds with oil slicks around their neck. Or you see a squirrel running away, or the dog does, he goes after it. That's FOMO. It's a triggering, instinctual trigger. Do you understand that? You have to understand those processes within you. Okay, now let's talk about this. And these are not trade recommendations. Swing is here, stops are here, stops are here, I have resistance here, and this is my outside edge. If I come outside, I have to be looking at my liquidity and my outside edges, and I have to look left. Write this down. Mean reversion, underline the term mean, one of my favorite things. This is what I call bread and butter. And the thing about stepping on butter is you can fall on your butter. The thing is that the most common behavior in all time frames is what's called mean reversion. This is the first trade or concept that you should be thinking about, because when we come outside somewhere, and this is the thrill, and there's high volume here, so this is a level of resistance. If I come out, then this trade would be potentially to come back to the mean. It's a rotational trade, and then we can do whatever or do nothing, or we keep squeezing and then there is no trade, or you take a stop. Those are the options available to you. Hope you like that, because that's it. So if I come out, why am I going up? Well, one of the things we got to be aware of is we hit a target. So this might be the low of the day. Not my job. I won't know until the end of the day. How about you? So if I know I don't know, I know my next possibility is to come out, squeeze some of these weak sellers out that are trailing their stops, and then I want to use their stops if I get a trigger to come back there. And it has to qualify. In other words, range, where the stop has to go, helmet, and then where's my buyers? Let's come back to the other side where let me show you. Now, these are all structured trades. You would already, if you're in TraderLab, you would already know to be looking for this trade. And it has a specific name, mean reversion. And this is the mean. Now, the trick with all this, of course, is where's the outside. So we have to concentrate on the outside edge. And typically the outside edge is low volume. Like, I'm not paying that. You notice how the volume dried up? It's the same thing in shopping. Less buyers. Now, I don't know if there's buy stops, if it'll take it further. Just saying. But this is where I'm trying to go. And let's look at something in a multiple time frame construct. Let's zero in right here. This is a low volume node, right? Everybody with me? Low volume node. Yes? No? Don't know what you're talking about? What is this? A low volume node. Look what I'm doing. I'm doing the same process in different time frames. I'm trying to come down here, which is 70, which is right there. So that's a low volume node. So if I'm going to short this to come there, that's why this is my outside edge. Now, I never have to take this trade beyond where my buyers were, which is right here. I can just go there to there and then trade manage. That's a structured trade. If it's not your trade and you're back in the Barca Lounger, there's nothing to do. This is structured. You see where it is and you see this. That's the main objective of this trade. Now, if there's no range, you don't have a trade. I don't think that's a big deal. Do you? And I do this all the time. You see me do these things. And there's no magic here. Guys, I have to tell you, this is not complicated. And now you're probably thinking to yourself, yeah, I don't know. I'm going to tell you what. The market's random. Let's not confuse randomness with complicated. They're two separate things, okay? Market is random. If you're organized and you know where your trades might show up, then the outcome is random, but not the locations. And then you need a trigger. So if we get under here, we're going south. If we can't get below here, it's too low and we squeeze. That's as deep as this gets. Does it have to, is it any more complicated than that? Let me know. YouTube, is this any more complicated? Ito's asking me, when taking shorts, what about the low probability of taking them both overnight high and low? I'm aware of that, but I have to stay in alignment with the auction. What I always say, and it's just something you have to think about, statistics are a piece. They're not the number one piece. The auction and the behavior of the participants supersedes everything. Statistics can go out the window. This is what trading is. Trading is random. So we use statistics as a guide based on the context. The context is clearly down at the moment, unless of course it's going to change. And I will tell you, for me, I would suggest for developing traders, you don't take a long today, because that's counter trend. You could be done, or you're just going to take continuation shorts until the condition changes. You will take some stops, we all do. And then when you define change, if it changes, you're done. And then you've had a terrific day following a plan that you put together using structured trades that you've validated and reversed engineered in your time frame in the TraderLab, you see. So different traders, I know traders in TraderLab that'll put a trade on, put the stop up at the high of the day and take a nap. And I'm thinking of one in particular, and will trade the higher time frame targets and sit through the counter rotations. Other traders are going to micromanage, and they're going to miss the bigger rotations, but they're more psychologically aligned. What is right for you? I can't answer what's right for you. So when you're going for higher, larger rotations, which have the opportunity for more profit, you give more MFE back. How do you find the right answer? You see, because of that randomness. You do it with statistics. Is everybody tracking? Kiloton, I don't understand that. You want to explain your comment there? How we do it in YouTube. What makes it random? It's 100% random. Has nothing to do with algos, has nothing to do with anything. It just has to do with the rotations are random. The market rotates into stops on both sides. That's how it works. Because in this leg, there's sell stops from these guys, if there's longs in here. And in this leg down, there's buy stops up here. So it's random as far as which way it's going to go. What do we know? We know the market is short and that there's buyers built in to these swings. So if I can't get below here, then I can come up and squeeze. So I've identified locations, which is this, and I got to clear this. If I don't clear this, which means maybe it's too low, and I come above here, my next area is going to be out here after I take these stops out. And let me look a little further here if I got something else. I don't think so. Yeah, I'd be looking out here, which is this. If I get there. If I don't get there, this is the last short with the scale there. And now you're just hanging out with your tongue on the, on the floor with the rest of us. And this is what happens emotionally. Euphoria, fear, right? Euphoria, oh, I got it now. Oh no, I'm going to give it back. Fear, bailout. What should you do? Need the answer. What should you do? What does your plan tell you? That's what you should do. This randomness is yanking your emotional chain. The lunatic, hide, always active in your mind, always talking to you. Do you hear the voice in your head right now? Do you hear it? Would you have bailed out here? Because what does Hyde say? You're going to give it all back. You're going to get stopped out. What does your plan say? Short until it fails. Can you do that? Can you deal with your fear? What's the biggest obstacle? It's going to be you. You can learn this. And it's going to be the most difficult thing you do because of your emotions, your fear, your need to be right, your need not to give it back. You will give it back. You will take stops. You cannot know the high and low of the day. So, what do? Accept randomness, build out a plan that operates in randomness. Follow the plan and consider it a curiosity. Or think of it like buying a little lottery ticket for a few $100s where you can get outsized, you can win. Because if you have an edge, you're not buying a lottery ticket. You're playing a statistical probability that favors you. Why wouldn't you buy that over and over and over again if you know where the edge is and you know where the trade is? How do I know where the trade is? Because I understand how the market works. Is this complicated? No. I don't believe it is. Now, here's the thing that is difficult. This is like a foreign language to you because you've grown up and been weaned on backwards looking indicators. And if you're like most developing retail traders, you've taken the smorgasbord of indicators and put them together to try to create something that has an edge. And I can assure you with a high probability, and not necessarily 100%, that you don't have an edge, you just have random winners. There's the problem. So I also have random winners, but the difference is they have an edge. So I can have confidence in taking the trades, not in the outcome of the individual trade. Isn't that a different thing? So this is the short, this is the scale, and notice what it did here. In the past, and I mean long past, I've been trading since 1980, but in the long past, I'd bail out right here. And one of the ways I overcame it, and I just want to remind you of this, and there is a tool available in TraderLab. One of our traders, Greeny, created something, and this is something I created for myself, I don't know, in the late 1990s. It's called the error cost calculator. If I bailed out here and no longer am in the trade, this is an error. I would then take whatever the trade was supposed to do and subtract it as an error because I bailed out. Now, suppose I bailed out here and I took a stop. It's still an error because I should not bail out. And then I would subtract whatever happened. So it's still an error. And I started adding up the errors. And by the way, where are we trying to go? Where are we trying to go with this trade, Tom? Great question. Let's see, where are we trying to go? Where are the buyers? They're here and here. So I got to look at this right there, outside edge. Should have been a little faster. See why? Let's look. The sellers are there. There's the sweep. That's the counter rotation. There. I come down again. This is resistance. The buyers were there, and now I get my buyers again right here. Come back up. My sellers are here. This is my support. This is my resistance. This is my support. And now my buyers were here. So as I'm coming down, I need to look at this. I need to be aware, of course, of what was this? Outside edge, resistance. And I need to clear this thing and get under here to go down to the low of the day. If I can't do it and I'm going to stay in this kind of a thing, I just get out of the short, ring the register, get back in the Barca Lounger. Are you guys tracking? Top Cat, I can't tell you why we're down so much today. I don't think about it. I just follow the auction. I don't think about it. If there's a report or something, I'm not thinking about it. I came in this morning looking for longs, knowing that I had a clear 70.02. And it was long until it became short. Now there's no longs. How far is it going to go? No idea. I mean, as far as I knew, it was going to stop a long time ago. Up here. Because this 23, in fact, this was my target yesterday on the shorts. We only got there. See? So this was it for today. If I get under here, I'm going down to the next level. I've got this. If I get under here, I'm still going. And I don't know, I got stops under here, and I'm not even sure what's it. Oh, yeah, 45. We can just keep going. Nothing says it will or won't. I have no idea. How we doing in YouTube? Are you guys getting something from this? Please give a like, support the stream. Remember, there's no cost for TraderLab. It's available to all of you. And I've got to remind you, there is a contest going on. It's called the Blue Jacket. Very cool. All you got to do is mark up charts from Bookmap that show your entries and exits on the screen, whether you're using the dome or the click on chart, which is very cool. That's what I use. Send them in. You can win the blue jacket. Very nice. I like my jacket. You guys have final questions? I only have a couple of minutes before they turn off the power here. I hope you can see the screen reasonably well. I do not have my streaming computer. As you guys know, it went to the happy hunting ground while I was in Costa Rica, which was a nightmare. And I'm kind of stuck with this until I can replace everything. These are ultra wide monitors that I trade from. So this is, what I use. Still going south. So can you see the short? Mean reversion. Underline, what do I always say? Mean. Are you guys tracking? You get something from this? Please give a like if you're in YouTube. Review these streams. You can learn to trade, in my opinion, if you do the work. Now, it is going to be foreign and it's going to be difficult. The part that's difficult is letting go of your beliefs that you've had for maybe many years about what the business is and how to navigate it. It's very hard to change. It was for me. Don't forget, I was a built systems, so I was very much a technical trader from a mathematical point of view, not from so much a structural point of view, system based. So the system did all the work. So to let go of all the years of work, and that's what it was, years of work, I had a lot of resistance to doing that. The old concept is you make an investment, you want to hold on to it. You don't want to be wrong. That's human nature. I had to learn more about human nature and the decisions I made because I wasn't conscious. But part of the decision process that we make, the rationalization, I'll get something out of it. No, what I got out of it was a defective process. So the need to be right, which is the same experience you have here in the market, is at play in all dimensions in your life. The need to know, the need to avoid risk. Can you see these threads of continuity that are through our lives and everything we do? Can you see that? Is it logical? And have you ever thought of it this way? I'm going to say probably not. So the TraderLab is about the business of trading. Sometimes you take a long at naked VPOC. What made it short only after the failure? Well, the naked VPOC's a target, but I won't take a long when we're inside a value. We fell inside after being out. So for me, there's an 80% probability of traversing the range. We failed at the ETH H high, which was fine, and I already knew that to get outside I had to clear 70.02. So that's all my plan. Coming down the naked volume point of control was the retail price from yesterday, but I was already rejecting everything above. So then it was get short. Now coming down this far, not on my plan for today. That's the thing about trading. But the other part about trading is alignment and just take the trades. There's no prediction. At least I can't. I mean, I spent years about it's going to go here, it's going to do that. All this jazz. Fibonacci, Elliott wave. What a waste of time. Oh yeah, it works randomly. Let's keep doing it. We can make it better. Look at this. Would you be okay with a short? Here, 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 here. What do you think? There. All these are structured trades. Now there's my sweep, there's my liquidity. I need to watch for the counter rotation. This is my location, right? So I'm right at the number. I've got this guy sitting in the book in my sweep. I need to watch here. So now I have the possibility, and these aren't trade recommendations, this is time frame specific, that if I get below here, I can keep going or I counter rotate. Now it's a trade management opportunity. What do I know? Too high. Microstructure here. Watching this, and then if trade management or whatever. How we doing in YouTube, guys? Please give a like if you want this stream to continue. There's a link in the bottom of YouTube if you are inclined. There's no cost for TraderLab. Let me give you a little peek at TraderLab if you haven't seen it. This is a community of like-minded traders that's come together to leverage their collective experience. It's about the business of trading. There's a lot going on here. It's a very active community. There's not too much kidding around in here. It's all about business. There is a little play, but not much. It's not romper room, okay? If you're interested in this, first of all, why don't you give me a little appreciation? And that's a like in YouTube, subscribe to the channel, use the link in the bottom of YouTube, join the TraderLab. I'm not going to be doing this indefinitely. I have to let you know that when I'm doing this stream, you see the trades I'm sharing, I'm not able to take them. So there's a little bit of conflict here, you might say. So I can't say how long this will go on. But if this is interesting to you, this might be the time to take advantage of it while it's still available. I'm doing it going over 4 years, I think. So that's getting a little long in the tooth, as they say. But I would love to meet you in TraderLab, and so would the other traders. It's a community of traders that have come together to leverage their collective experience. If you want to be part of this community, it's about the business, and it's open to all of you. And of course, remember, there's a library of webinars. Thanks, Ned, for doing this for us. Watch the primer webinar. It's got about 38,000 views. The Holy Grail of trading, there isn't any, but how close can you get? Stop gambling, start winning, trading multiple time frames, day trading with indicators, why most traders fail. Are you trapped in trader Groundhog Day? Me, yes. Structured trading, microstructure, and a lot more. And a document section too. Please don't forget to give the like. Thanks for visiting TraderLab today, and I look forward to seeing you guys tomorrow. Don't forget the like on the way out. Consider it currency. Thanks again, and thanks for visiting the TraderLab today.